Hey everyone, this is your weekly market outlook for the 21st to 25th of August 2023. Just a very quick update this week. We don't actually have a lot coming out from the fundamental front, so let's take a quick recap of last week. So we've got the RBA meeting minutes to start the week, apart from the Japanese GDP, but we'll talk about that in a minute. The RBA meeting minutes, as you know, kind of expected, it was a little bit of a neutral dovish side in terms of the meeting minutes itself, so that kind of adds a little bit of downward pressure on the Aussie USD, but we'll take a look at that from the technical standpoint. The Japanese GDP growth, it was good, right? So we've got the annualized preliminary GDP that was up from 3.7 to 6%. This was beating the consensus of 3.1%, pretty much double the consensus that we have from the GDP numbers. This in part is actually from the weaker Japanese yen. It does help boost the economy a lot. So in a sense, you know, having a Japanese yen that's weak, it does help out with the economy as well in Japan. We've got the UK unemployment numbers. This one here again coming out much better than expected, 4% to 4.2%. That gives credit and credibility to how sterling has been holding on strong the past week. We got the US retail sales number, which is also good, 0.3% coming up at 0.7%. This is beating out the consensus of 0.4%. UK inflation rate, this one was huge, right? 7.9%, consensus 6.8%. We got exactly at a consensus, so that's negative 1.1% in terms of the inflation. So the inflation drop is really significant. However, the note here is that there's a lot more for the Bank of England to do here, and you know, with just that one drop from 1.1%, you know, in terms of the inflation, that's not going to give any indication that the Bank of England needs to stop and whatever not. I think the Bank of England is still going to continue hiking interest rate, and that is pretty much what market has assumed. That's again boosting out the sterling itself. So we put out a little bit of a note on sterling at the end of the week last week. It was a very interesting take on the sterling world, which we'll take a look again on the technical analysis. But yeah, sterling is in a very good position at this point in time. We've got the FOMC meeting minutes again. I think coming out from the meeting minutes, it has a little bit more of a hawkish tone. You know, there's the consideration for not hiking. Sure, there was a discussion about that. You know, I think maybe about 40% of the FOMC voting members kind of think about whether or not they should be hiking interest rate in the previous meeting. But at the end of the day, conclusion would come in that there's likely going to be that one more hike in September before they would consider anything else. But we'll see what happens. I think the September hike is still going to be live, regardless of what it is in terms of inflation. But you know, what's after that, I think that's basically what the market needs to know, and whether or not there's going to be any forward guidance coming out from the FOMC next month, right? We've got the Japanese inflation rate. Again, this is up 3.3% to 3.3%, beating out consensus at 2.5%. But again, this is something that's kind of expected. I think the core inflation actually went down. It's not here on the list, but the core inflation actually went down. So that kind of puts the Bank of Japan in a much safer place, that whatever they're doing in terms of their monetary policy, I don't think they need to adjust it, right? We've got the core inflation coming down. Sure, the headline inflation picks up a little bit, but that's, you know, completely normal. I think the core inflation would be the main focus, but the core inflation has fallen down from Japan. All right. So that's last week. This week, it might seem like a lot. There's actually not a lot. There's a lot of medium impact news, but in terms of the high impact news, we only have the flash manufacturing and flash services PMI coming up from France, Germany, UK, and the US on Wednesday. If you take a look at the expectation here, I think it's more or less about the same. We're not really looking at huge consensus here. Previous number for the France manufacturing, 45.1, expecting the number to go up to 45.2, services 47.1 to 47.5, German numbers 38.8, which is the surprise last month, because it was such a huge drop, and you know, it's below 40 at this point in time. This one here is expected to continue to go down from 38.8 to 38.6. Services is still okay, it's still above 50, still pretty stable. The UK numbers 45.3 expected to go down to 45.1. Services expecting to go down 51.5 to 50.9. Still above 50, no big deal there. The US manufacturing numbers, just a slight dip, maybe 0.1%, 0.1 on the index, but services expected to go up 0.3 to 0.4. Right? That's pretty much it. We don't actually have a lot of news. Sure, we got the weekly unemployment claims from the US, but then again, that's kind of like a weekly thing. Obviously, it's still going to move the market, but I think the focus would be on the Jackson Hole Symposium. It's going to start on Thursday and ending on Saturday. I think there are speeches coming up from FOMC, Fed Chairman Powell, and as well as Lagarde, but I think Lagarde's speech is actually going to be on Saturday. Yeah, it is on Saturday. So yeah, we've got comments coming out from the FOMC and the ECB during the Jackson Hole Symposium. I think we might see the market looking for some forward guidance in there, but it's not going to be anything surprising at this point in time. I don't think there's a lot of pressure on the Jackson Hole Symposium this year, unlike the previous years. Okay. So that's pretty much it from the fundamentals. We don't actually have a lot of heavy lifters here on the fundamentals, so it's going to be a little bit more on the technical focus of this week when we're looking at the market. All right. So let's talk about the dollar index here. We are back at 103.50. This is the expected range of resistance that we have been noting. If it does break above 102.50, and that's basically the case, we got the cap at 103.50. At this point in time, it is still really capping the market. Now, this is going to be tough, because if we take a look at where the 103.50 is going to be acting as a resistance, it does indicate that the potential for the dollar index to actually could do a little bit of a correction back down towards 102.50, right? And if it does bounce off there, then it might actually break 103.50. I don't think we actually have enough strength at this point in time to actually break 103.50, but just in case, if it does happen, if we see that break above 103.50 without a correction first, then I think it's likely to be capped at 104. If we do that pullback towards 102.50, then it will likely have a lot more momentum to actually go and break 104 once it takes out 103.50. So this one here is a little bit tough in terms of whether or not the US dollar is actually going to strengthen or not. We are going to put a caution here that if we take a look at it from a technical perspective, there's a possibility that the US dollar would likely strengthen in the coming months. All right, the word there, it's months. So if you're intraday trading and you're taking a look at the dollar index here, I think we should consider the 103.50 as that main resistance to cap any further progress on the US dollar itself. Now, Aussie USD, also very similar note. If we take a look at the Aussie USD, we've been saying, look, there's a double top there at 69. So we've seen price progress below 66. We want to go short on the Aussie USD. And I put out a note on Friday saying, look, we are at 64 cents. You guys need to be a little bit more careful if you're thinking there's going to be that further pressure to the downside for the Aussie USD. Now, the most likely scenario for the Aussie USD, and forgive the mess here on the chart because I need to show you the pivot levels as well as the Fibonacci. We have reached 161.8% extension level. That's at 64.16. We are basically holding it strong at key psychological level at 64 cents. Now, for this one to progress further, I think we need to see a little bit of a correction to happen. That correction could take the Aussie USD back towards 65 cents and even 66 cents. Ideally, we don't want to see that move towards 66 cents, but any short-term pullback, any short-term bounces off 64 cents, we could see price actually pull back to 65 cents. If you're thinking of going short in the long run, I think there might be a better option there. If there's that pullback towards 65 cents, it just gives you a much better price to go in for a short. But short-term traders, you might want to look at 64 cents and consider this a strong support. So intraday traders might actually take advantage of 64 cents and they might actually trade this back towards 65 cents. Now, the reason why I have this zoomed out is because there is actually another floor at 62 cents. Now, if we do break 64 cents, then we're likely going to see that movement towards 62 cents. Now, that 62 cents level is important because that is actually the weekly swing low for the past 1 year. Okay, that's dated pretty much in October. We're pretty much towards the end of August, so it's basically the swing low for the whole year, right? So I think if we do continue to break 64 cents, I think 62 cents is a viable target. However, that is something that we consider in weeks and months, not something intraday wise. Intraday traders might actually be looking, intra-week traders actually might be looking at 64 cents as a much stronger support to potentially look for a buy in Aussie USD. Now, next one is EURUSD. We saw the EURUSD has that potential to transition below the Ichimoku cloud by just remaining in sideways market condition. That's basically what we saw, and that's that we saw the transition happen. Price is currently trapped between 1.0850, 1.09. I think we're still looking at 1.0850 as a strong support at this point in time. So if we see any movement above 1.09 intra-week wise, we might actually see a little bit of a correction to the upside for the EURUSD. That correction level would actually take it a little bit higher, potentially towards 1.10 and then 1.1050, where the resistance 2 and resistance 3 is located, but it's still within the Ichimoku cloud. So I think that would be something to consider this week. That, yeah, in terms of how the US dollar has strengthened, I think we might actually see a little bit of a correction going on in the market. We're potentially looking for an intraday bounce, intra-week bounce in the Aussie USD as well as the EURUSD, especially in the EURUSD. If it does break above 1.09, I think there's going to be a lot more traders looking for that correction towards 1.1 on the EURUSD. The pound USD, as I say, this one here is a little bit strong, right? And if we take a look at where its price has been holding out, it's actually 1.27. We actually haven't seen a close below 1.27. In fact, if we take a look at the recovery on the pound USD, this one here is actually very unique and very precise technically. There's only that 1 day period where the Ichimoku cloud is actually very thin, and the pound USD managed to actually trade within that Ichimoku cloud to not break below it. Okay, so right now technically this is still above the Ichimoku cloud. We are still at Ichimoku cloud support for the pound USD. The momentum is ticking up, so again, if we see any further progress, ideally above 1.2750, 1.2775, we're likely going to track higher. So intra-week and intraday traders, they're probably going to be looking at 1.28 as that resistance, 1.27 as a key support. The weekly pivot is also located above 1.27. It is actually at 1.2710. Take a look at where the resistance 1 and 2 is located. It is pretty much at 1.28 and 1.29. Okay, so I think there's still going to be strength in the pound USD. This one here is a good candidate and a much stronger currency compared to the Aussie USD as well as the Euro USD. This one here, we don't see that transition below the Ichimoku cloud, so for now we're still going to consider this an uptrend with 1.27 as the immediate support and a very strong support at that. Okay, lastly, we've got the dollar Japanese yen. The dollar Japanese yen a little bit unique here. Overall, it is still technically an uptrend. We bounce off Ichimoku cloud and whatever not, but we are facing a little bit of a resistance right now. It's kind of trapped between 145 and 146.50. We've got support at 145. So if there's a daily close below 145, then yeah, we might actually see a little bit of that dollar weakness translate to dollar Japanese yen. We might see this one slides back towards 143, 142 levels before we actually see any further progress on it. So I do anticipate a little bit of a correction to happen on the dollar Japanese yen. However, one thing to note here is that we still have a little bit more room to go to the upside. There's still at 147 located at 127.2% Fibonacci extension. So yeah, we might actually see price just hold off at 145 being held strongly, and then price might actually bounce towards 147. Might find a little bit of resistance at 147, but at this point in time, if you're thinking of any long-term positions on the dollar Japanese yen, is it time to short the dollar Japanese yen? You might need to wait until there's a daily close below 145. For as long as 145 still holds, we're still looking at a potential for the dollar Japanese yen to climb back towards 147. All right, so that's pretty much it for this week. Good luck with your trades, and I'll see you soon.